What's up, millennials? Today we're going to be taking a look at the valuation of a company called Ree. This is a company that makes modular platforms for electric vehicles and also autonomous vehicles. And this company is going to be acquired by the SPAC that's currently trading under the ticker symbol VCVC. Before we start, if at any moment in this video you don't really know what I'm talking about, please check out my full SPAC guide that I released a few weeks ago. It's going to be in the description beneath this video. Today we're going to be taking a look at method number 2. And if you need access to the Excel sheet I'm going to be using today, you can join our Discord. It's for free. You can just go to nesami.com/discord. You can then leave your name, leave your email address, and you're going to get access to it. And lastly, don't trust me, verify me. I'm just documenting my journey here on YouTube. I'm certainly not a financial advisor. Don't copy my numbers as is. Just use your own numbers, take the Excel sheet, and plug in your own multiples. So Ree is a company that builds modular platforms for electric vehicles and also for autonomous vehicles. It's just the platform, so it looks a little bit like the skateboard technique of Canoe. They have these smaller ones for last mile delivery, but also the larger ones for trucks and buses, for example. With regards to the merger date, we don't have a fixed date just yet, but it's likely going to be somewhere in Q2 of this year. If we look at the pro forma valuation, we can see that they started trading at $10 per share, as is very usual with all the SPACs. And we can see that there are going to be 358.1 million shares outstanding after the merger. So those are the numbers you can actually plug into your Excel sheet over here. $10, 358.1 million, and then you're already going to arrive at a pro forma market cap, or a pro forma equity value, as they call it, of almost $3.6 billion. What we can also see is they are going to have 436.5 million in cash on their balance sheet. So that's the number you can plug in over here. Man, it's really difficult to talk today. So then you have that pro forma market cap of almost $3.6 billion. Then you can take off the amount of net cash they are going to have on their balance sheet. And then you're going to arrive at this enterprise value of a little bit more than $3.1 billion. Thing is, however, if you go into TradingView, you can see that the current pre-market price is $10.67. So that's the number you can plug over here in your Excel sheet. And then the pro forma market cap is going to be a little bit higher compared to the different market cap we just have been looking at. So the current, based on the current price per share of $10.67, the current pro forma market cap is 3.8 billion, and the current pro forma enterprise value is almost $3.4 billion. However, we of course want to know what a fair enterprise value is. For that, we're going to need two numbers as always. First of all, we're going to need a revenue, and then we're going to apply a certain range of multiples to that revenue to arrive at a fair enterprise value. Let's first talk about that revenue of the future. Well, because they are not going to have any revenue for a couple of years, or at least in 2023, they're going to start to have some kind of revenue, but then they expect, of course, to ramp up that revenue quite a bit to even $5.7 billion in 2025, because 2025 is the year we are going to be taking a look at in this video. So again, keep in mind, this is expected revenue. We don't know for sure if this is actually going to be achieved or not, but yeah, let's just roll with these numbers for now. So we have that number, 5.7 billion. That's the number you can plug in over here in your Excel sheet. And then we need to have a fair range of multiples. Let's actually go to another page over here, page 39. Here we can see a valuation benchmarking page, basically meaning that they're going to compare their own multiples, so the multiples of Ree compared to the multiples of other similar companies out there. If we, for example, take a look at Ree's multiples, we can see that in 2024, they are trading at a revenue multiple of 1.2x, in 2025, 0.6x, 2026, 0.3x. And as I've said a minute ago, we are going to look at 2025, the multiples of 2025. Now, in the investor presentation, it's a little bit annoying because they actually don't compare the 2025 multiples with the 2025 multiples of different companies out there. They actually look at 2024 revenue multiples instead. So that is something we need to take into account. We need to keep in mind for a minute, when we do the actual calculations in a minute, okay? So let's actually look at these 2024 revenue multiples of these similar companies out there. we can see a list of companies like Workhorse, Nikola, Canoe. Oh yeah, I suppose Canoe is relatively similar to this company, Ree. Excel Fleet, Hyliion, Lion Electric, Arrival, also relatively similar, I would say, Fisker, and Lordstown. And we can see that these multiples are, well, they are slightly on the high end maybe. But yeah, again, these are multiples for 2024. And we can see that the median of these multiples is 1.3x, basically meaning that the number in the middle of this range of multiples is 1.3x. Very well. So we see more or less a range of multiples between, well, 0.7x and 4.7x. That is the range of multiples of these companies in 2024. Let's scroll down one page, because they say, okay, based on those multiples between 0.7x and 4. Whatever, what was it, 4.7x or something? Yeah, 4.7x. They say, well, we believe a fair range of multiples is 1x on the low end, 2x on the high end. And again, that median multiple was 1.3x for 2024. And here they actually say, well, we are going to be looking at 2025, so we need a revenue multiple of 2025 as well. Might sound a little bit confusing, to be honest with you. I'm very sorry if that happens. But the thing is, I kind of think that this range of multiples might even be on the high end. Because if you look at these multiples of Ree in 2024, it was 1.2x, 2025 0.6x. So that's already half. Now, if you look at these multiples, if that median of these companies is 1.3x, maybe the median revenue multiple of 2025 instead of 2024 should also be like a 0.7x instead of 1.3x, so about half. But let's actually just take a look at the calculations to see what kind of fair prices per share we come up with. So let's first take a look at the revenue multiple range of 1x on the low end, 2x on the high end. And those are the numbers you can plug in over here in your Excel sheet for the low multiple 1x, for the high multiple 2x, and then the calculation or the Excel sheet is going to take care of the calculations for you. First of all, what it's going to do is it's going to take that revenue we just saw of $5.7 billion in 2025, and it's going to multiply that by 1x, and it's going to also multiply it by 2x to arrive at a low enterprise value of 5.7 billion and a high enterprise value of 11.4 billion. And then a midpoint enterprise value, my lord, today is a really difficult day, of about $8.6 billion. Very well. So we have these numbers. Now, those are the enterprise values. We, of course, want to know what a fair price per share is going to be. The thing we need to do is to first of all go from an enterprise value to a fair market cap. How do we do that? In the beginning of this video, we said that the difference between an enterprise value on the one hand and a market cap on the other hand is the amount of net cash they are going to have on their balance sheet. And we said that was going to be $436.5 million. So we take these enterprise values, we then add back the amount of net cash, and then you're going to arrive at these fair market caps. So on the low end, 6.1 billion, on the high end, 11.8 billion, and the midpoint fair market cap about $9 billion. Then the only thing you need to do now, or the Excel sheet needs to do, is to take these market caps, divide them by the amount of outstanding shares, and then you're going to arrive at these fair prices per share. So for the low valuation, $17.14. For the midpoint valuation, $25.09. For the high valuation, $33.05. But again, keep in mind, this is based on the low multiple of 1x, high multiple of 2x. I said that these multiples might even be on the high end if you take into account that we have been taking a look at competitors' multiples of 2024, and we have now been taking a look at Ree's multiples of 2025. So let's just play around a little bit with the numbers. Let's just say that this is a little bit on a high end, and let's just make it 0.5 and 1x, because I said that the multiple of 2024 or 2025 rather might actually be more of like 0.7x instead of 1.3x, a median multiple, right? So if you take these multiples, 0.5x on the low end, 1x on the high end, then the fair prices per share would be between $9 more or less and $17 more or less. So the question to you is basically, What kind of multiple do you think is fair for this company? Do you think this company deserves a multiple of 1x on the low end, 2x on the high end, or should it be a little bit lower like this, 0.5x on the low end, 1x on the high end? Let me know in the comments. So based on these calculations, that would mean that Ree probably is actually still undervalued. Now, of course, don't trust me, verify me. Always check what I'm doing, check if everything is all right. And also keep in mind that we have been taking a look at assumptions. We've taken a look at a predicted revenue number in 2025. We've applied a certain range of multiples to that revenue of 2025. And you might think that the revenue multiple should be higher. Maybe they should be lower. Maybe the revenue is going to be higher. Maybe that's going to be lower. And if you change one of these factors, the entire calculation is going to change and your fair price per share is going to change as well. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!